the last use case of the all concepts that I talk about throughout these videos is for a long-term swing strategy. This is, to be fair, something I don't do really often, and I'm not a best kind of a positional trader, so there is definitely a little bit of a adjustments when it comes to this. The characteristics of this long-term strategy is obviously low trade frequency with a high risk profile. You are opening very few positions, but this kind of allows you to allocate more money to these trades, because you should be really coming in with a strong conviction when it comes to positional trades, which are trades that are held for weeks and even months. You are working with monthly, weekly, daily, and execution time frame, which I choose to be H4 for this example, but once again you can use even higher time frames and, for example, only execute on daily. This really is mostly for people who are just too busy with any sort of active monitoring, because, for example, for this intra-week swing strategy that I trade, I do my preparation in the morning, then I just actively monitor markets for a couple of hours, and usually, during the lunchtime after the third candle, the H4 candle is going to close, I will just go and do some other things. You can go out, go to the gym or whatever. You don't, for this intra-week strategy, you don't need to watch charts all the time, but it still requires, kind of a active, proactive approach to the markets. For this type of strategy, this is really for someone who might have time to just look at the markets in the morning, and then in the evening, you really are just too busy with life and everything else to do anything. You are trading a large variety of markets, and you need to understand fundamentals besides the technical analysis. Obviously, more markets will give you more opportunity, and understanding a fundamental narratives for them is a key. The Bitcoin didn't rally from 10k to 60k because it hit any sort of SR. It all happened because there was this huge interest in cryptocurrencies, and it was a fundamentally driven event. The technical analysis, the move might started at the technical levels, because that is used by a lot of people, but the staying in those trades was crucial. The executing was the easy part. The having the conviction throughout the couple of months and even the whole year was the key thing to do. So the higher time frames, the monthly, weekly, and daily time frames, you are marking out the key levels, and they are serving for setting a bias and trading once again one level to the another. What I would suggest you here is to actually, even that I'm pretty against using kind of a traditional indicators when it comes to this positional trading, you might not want to be trading with a fixed stop loss, for example. You might want to think about implementing some sort of moving averages that will be used for a trend following, and you will be trailing your stops based on them, because really the key here is to run your trades. Not every trade is meant to be run, but a lot of them will be. The execution time frame, the taking trades in flow of your higher time frame analysis, and using H4 patterns for entries in toolkit, there is only price action and volume. You are not using any sort of order flow tools that I covered. You don't use market profiles. Only the composite profile use in other time frames is worth using, but besides that, you can actually, just looking at the price action, just looking at the volumes, and watching the fundamentals of the markets, and if that is in line with your trading ideas. Giving a trades room to play out is a key. I will show you something in a bit. What I mean by that, traders can use spot market to build up position and avoid fees. If you will be buying something like Bitcoin or crypto, in general, you first of all, you can scale into the position. This is the only time that I would do something like this. I'm not fan of, you know, scaling in and scaling out to the trades, but when it comes to long-term holds, it's actually fine to buy in chunks when you don't know exactly when the thing is going to, you know, reverse. Using a spot, you know, obviously makes sense, because in crypto, if you are not trading with leverage, or if you are not trading futures, you are not paying the funding fees, which can add up once holding a trade for a long time. You know, when it comes to legacy markets, you will need a bunch of money to kind of pay in futures, obviously, the maintenance fees, and in spot forex and CFDs you will be just paying swaps, which are not that crazy. Taking trades on a higher time frames requires a lot of patience and ability to give trades room for a daily and weekly fluctuations. So let me show you this. We will be taking a look at, let me delete this first, and I'm going to take a look at GBP USD on a monthly chart. And this is kind of a thing I wanted to talk about. You have a level of SR which got, you know, broken, and if I gonna take a look at the weekly, that is your weekly cluster basically. The structure above it is kind of perfect. You know, we took these highs before the sell-off, so there is not many things to worry about, but the market will hit the level on a monthly. I will show you this, and it will stay there for 4 months, and even end up taking the high before actually the real move will happen. So ask yourself if you are able to stay basically flat for 4 months in one trade. You know, this is because, once again, when people are posting these higher time frame charts, you know, like monthly, yearly charts, a lot of them just don't understand that this really takes time. You know, you had this March sell-off obviously in 2020, which is kind of your failed swing, but if you were targeting, I don't know, these highs which haven't even got yet, the 2 years pass by. So, you know, once again, your expectations are really, this is really something you need to consider. When I am looking at positional trades, I don't look at monthly time frames. I do the weekly and daily analysis, which I do the completely same way that I showed you on the intra-week, with the intra-week strategy. You know, I plot my volume profile, I mark out all the levels that where I'm interested in trading, and then if this is something that I want to hold for a long period of time, I will just use the H4 for the execution. I don't go lower to the 30 minute. If you would do things like this, so basically you would stick with weekly, daily, and H4 charts, you know, you will get plenty of time to, you know, make decisions. You know, you can check those H4 closes on your phone, for example, if you are at work or anything. So once again, take a look at ETH, for example. On a weekly, we did hit this cluster on a weekly. It was not a good one in my eyes because there is a double bottom below it, but in time frames such as these, you know, in these higher time frames, you need to be aware of these things. So you're gonna have this. I use kind of a purple level, and you can also see on a composite profile you are hitting this POC, which you cannot really see well. It's here. Okay, so you are hitting this POC basically of this composite structure, so it's a decent level, the top of this candle basically. Then you are going to go to the daily chart, and we have a failed swing on a daily. So you have your bias candle on a daily chart. You know, you have this swing low, you take it on a high relative volume, so you are biased for a day from the level, and then you have your H4QM basically at this kind of a level of support and resistance that was originally lost. So you might want to be taking a trade here and running the trade towards, you know, this is really a clean H4 cluster, for example, but more likely than not, you know, basically into this next weekly level, because once again you are playing it from weekly level to weekly level, okay, and your daily bias ends around here. So whatever, if you close the trade here or let it run a little bit more, that's up to you. But once again, like I said, this is the one of those rare cases where I am actually not completely against using some simple things such as moving averages, because if you ever read any kind of books about trend following, for example, this is too high. Let me just find a moving average that will fit my narrative, basically. The 5 is too low. If you ever read some articles and books about trend following, these people usually don't have a high win rate, but when they take a trade, they are able to run them for extreme long of periods of time. So for example, if you took a trade here, this moving average is working as kind of a confluence and holding a price as kind of a dynamic SR. So, and also, the moving averages on higher time frames, such as daily, weekly, even H4, I would say, are once again, they are key for a lot of people who are taking these positional trades. So something like a 50, 100 and 200 moving average on these high time frames might not be the worst idea, only to serve as kind of another level of confluence and dynamic SR. But even without that, it's fairly simple. You know how to mark levels, pick up a strong levels that go hand in hand with your composite profiles. When you are at a weekly level, you are running a trade to the next week level. If you are on daily level, you are running a trade into the next daily level. Look for your daily and weekly bias candles. Obviously, that one is important. I talked about, and I showed the example of Luna throughout in the videos. This bullish engulfing. The trade is pulling back a little bit now, but these are your bias bars. So use them and then just stick to the H4 time frame for the execution, especially if you just don't have time to pay more attention to the markets, or you generally don't want to. If you feel like the day trading and kind of this shorter term decision making is not your thing, which is completely fine. I talk with a couple of people who just didn't want to day trade because it required too much decision making throughout the day, and that's completely fine. There is no right or wrong way to make money at the end. So, and trading H4 is, like I said, it's fine. You just need to understand that you are not going to be taking a lot of trades, and you will need to monitor more markets, pay attention to the overall kind of a narrative. And also, I would say that if you are growing a small account and starting with $5,000 to $10,000, this is going to take some serious time to do. Okay, so obviously you want to have this kind of a chill approach. But if you won't manage to catch the massive bull run which crypto had in last 2 years or year and a half, and you will be trading in much lower volatility ranges, which is something that might happen soon, even in crypto, then you are looking at really a long time for your equity curve to build. Obviously, if you have $100,000-$200,000 just kind of sitting and getting ready to deploy for a trade, then it's something completely different. You will obviously make sure to collect data first, take a couple of months just for testing things and how they work, see the performance of the strategy itself. But then, once you get confidence and you will start trading with 100-200k, and you will be risking 3% per trade, you are looking at something like $5,000 per trade, basically. So if you then manage to make only 5R in a month, for example, that's still 25 grand if you are risking 5 grand per trade. So that then makes a sense. With more money you can obviously afford to taking less trades and just give them more room and let them run. My key point for all of this was to show you that these things are really working at the old time frames. You know, the price is fractal, the volume and everything is relevant to all time frames. You know, it's not just sort of a intraday thing, which a lot of people do think actually. So large selling usually marks out the end of the moves, like I said. But this is the thing, you know, you have a large selling to level of support, and it still takes a 10 days for market to actually move. So you need to be able to give these things room when it comes to this long-term positional trading. You know, it's not as simple as that you will enter a trade and it will go immediately your way, basically. Okay, so this was it for the last type of trading approach.